Man, all right. All right. So first things first. Did I that's crazy. Anyway, first things first, all I know is this. All I know is this. We called a beautiful buy from these supports. Actually, was it those supports? My fault. It was these supports. That's even crazier. We call buys from these supports here, man. Wild. Absolutely wild. And look how high they went. I think I only took 50, but man, it did 300. So just kind of looking back at that again, how we caught that, it was this situation here. And just for that overall, not like proof or nothing, but I mean, why not? We have not been having a good first couple weeks. As you can see, a whole lot of red here. But as we're sitting in the history, this was the very last trade we took. Entry was 1902.35. Overall take profit was supposed to be to 1909 flat. We cut it early at 1907.13. Figured it was a good win. We only had about $2 on there, so catching about 50 pips was around that $100 range. It was really a good trade. Now, overall, the reason why we even had to lower the risk this much was just because we were losing a little bit too much in here and things like that. So it kind of, we had to make sure we were rebalancing ourselves. So we are currently down 5%, but the overall goal right now, from now till the end of the challenge, is really just to have a 10% flip, just an overall 10% flip type of day, type of week. Um, worst comes to worst, finish off up five in the account, which is totally fine with me. Um, just morally up five in the account, and we'll get another one, and we'll go from there, starting off our risk a lot smaller, allowing ourselves to build upon wins and not digging ourselves in too deep of a deficit too early. Because really, I went down 3% in the first week, maybe even 4% in the first week, and then another percent to start the week. So yeah, I really couldn't risk too much without having a successful approach to the market. But I'm pretty sure we got it together now. We knew that there's a support here. There's a key level around here somewhere. Pretty sure it's at 19 flat. We'll call that good. 19 flat and something else here at 1902. Bang, call that good. And so pretty much, price came down, gave a bounce off this initial support. So that's pretty much our first leg, if you want to say, especially 15-minute time frame reaction first leg. And now this was our second leg, second attempt retest, and we took buys at the obviously we said 1902.30 something. So we took buys pretty much above this 15-minute candle. Stop loss below 15-minute candle, and just took it up, and it was nothing but bulls the whole time. So what we're going to try to do is we're going to try to repeat that. I think this time around, let's go do a fundamental breakdown first. So we'll attack. Let's go ahead and add this. Let's go ahead and add this. Let's go ahead and cut that. I'm not even going to do any background music anymore for my YouTube videos. Like, I don't even want any more issues with YouTube. So I need this to stream and do my platform. So all it's going to be is either silence or me talking. So right away, we are here on Forex Factory. One way that I've been able to revamp and refocus and clear my mind with trading, especially with trading the breakout strategy, no matter what, is being able to target volume times and high volume events. And when those are not present, and let's say, for example, let's say we're only looking for US dollar red events, right? Like high impact events, right? So initially, we don't get that here on Monday. When you come to Tuesday, you get Empire State Manufacturing Index came out. New York session, potential breakout there. That was it for that. Then we got Wednesday. You had the PPI releases. Then Thursday, you had unemployment claims. So like there was something every day for the U.S. dollar, pretty much. You know what I mean? Or not every single day, but pretty more days than not. And then on Friday, you got exiting home sales and FOMC members talking. Kind of chill, but definitely eventful, very eventful. I think the biggest thing where I'm gonna want to look at, I am gonna try to trade tonight, between tonight and tomorrow type of vibe. Um, See if we can end the week up a little bit more in profit. Not gonna press it too much though. Gonna let it do what it gotta do. But I just want to make sure I'm aware of what is to come. Period. So if I'm trading the pound, if I'm trading pound yen, we only have light impact pound news. Other than that, in London session, other than that, nothing for the yen, nothing for the pound. So if we're trading pound yen, the only focus there would be to remain technically sound. Let's delete everything. Remain technically sound and understand that yes, we're going to trade the breakout, but if price is at, what I mean, a major level type of situation, we'll figure out that looks like 59 200. We can go ahead and mark that off real quick. And we're going to get to these technicals, but just for an example, that's going to be the only line I make for now. But just for example, if price is around this 59 200 area, now if it wants to continue to break up and start to and do that for this Thursday night, Friday type of situation, then we'll just wait for it to break out, exhaust, create a support, create a minor resistance, retest the support. We get the confirms by getting breaks of minor resistance above after the second test of support, second and third test of support. You know what I mean? Minor time frame too, by the way, like 5 minute time frame. So these are just the lows of like 15 and 30-minute candles. But other than that, buys there. And if not, other way around, create the resistance, retest the resistance, find our levels of minor support, and prepare to take breaks back below, stop loss above resistance, and go from there. Keep it very simple. It's either going to work, it's not going to work, whatever. We'll take, a number of trades and call it good. So for the U.S. dollar, if I want to trade gold, understanding that for gold per se, there's no yen, there's nothing truthfully going on for the yen, nothing really going on for the U.S. dollar, and no other major pair from Asian to London. Now through London, everything's a little pretty light. You know what I mean? Some euro conversations, some Swiss franc conversations, and that's cool. Then you got come New York session, you have some CAD retail sales, so that can move gold just in general out of a range, out of a price action range, and you have some U.S. dollar, but nothing really in Asia, nothing really in London. So everything that we take in Asian and London are gonna just be patient, multiple tests, multiple this, multiple that. You know what I mean? And just very patient. So in terms of economic data and volume coming from the economic data sector, nothing too much. Now what we're going to do is come over here to our commodities. We're going to look at gold, and we're going to try to break down a couple articles that gold wants to be speaking of. So let's read a couple titles here. Now you notice it hasn't put out articles in, what I'm saying, since yesterday. Gold muted amid recession uncertainty. China optimism buoys copper. Gold clings to 1900 support after struggle to push higher. Mm. And that's true because they went from 1900, because we got buys at 1902, and that shit's at 1930 right now. Crazy. Gold's new year rally fizzles ahead of Fed cues. U.S. data dilute. See, I haven't read none of these. This was 2 days ago. U.S. stocks were failing as recession fears returned, and so on and so forth. Gold treat gold treads water above 1900. More economic cues await. Wow, so much. Man, let me get a quick little drink of water because it feels like there's so much. Oh, but in the absolute. One second, one second. Yeah, let me just mute this shit real quick. All right. I had to get some food. But we got some articles here, man. Mm-hmm. Hold up. Here, just stay on, okay? I'm gonna call Corey back. Just keep you on.
Okay.
Okay. Hold on. All right. So this one talking about. I don't know why I can't get rid of this, but whatever. Gold prices. Oh, it looked like it's still loading. Gold prices recovered slightly from a 2-day losing streak on Thursday amid growing uncertainty. Keyword over a potential recession and the path of U.S. monetary policy, while copper prices were steady on growing optimism over a Chinese economic recovery. United States retail sales and industrial production data for December read weaker than expected on Wednesday, ramping up concerns over a broader economic slowdown. Damn. Mm, mm, mm. Wow. Mm, 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 mm. Oh, wow. Okay. Let's read it out loud. Wow. That shows good. United States retail sales and industrial production data for December read weaker than expected on Wednesday, ramping up concerns over a broader economic slowdown in the country as it struggles with tight monetary policy and relatively high inflation. A report from the Federal Reserve, the Beige Book, also forecasts little economic growth in the coming months, even as price pressures ease. Producer price inflation rose less than expected in December. Still, overnight comments from several Fed members, including Loretta Mester and James Bullard, called for more interest rate hikes, given that inflation is still well above the central bank's annual 2% target. They also forecast that United States borrowing rates will likely peak around 5%, although most members supported a lower pace of hikes. Gold, blank, blank, blank. The yellow metal lost about 0.6% in the past two sessions after touching an 8-month high earlier this week. Data from the UK and the Eurozone showed that inflation remained elevated in the two regions. Likely, boom, 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 boom. More rate hikes by their respective central banks that could also potentially weigh on bullion price. Okay, one more time on that. Data from the UK and the Eurozone showed that inflation remained elevated in the two regions, facts, likely heralding more rates by their respective central banks. This could also potentially weigh on bullion
Honey,
prices. Yeah, love.
here, let's see.
Hold on, babe. I'm finishing up a stream though, okay?
Okay.
All right. Data from the UK and the Eurozone show that inflation remained elevated in the two regions, likely heralding more rates. Yeah. But prices of the yellow metal advanced in recent sessions on growing fears of a global recession, especially as more countries tighten policy to curb inflation. This also saw gold from a strong support level at 1900 an ounce. I saw that shit. Other precious metals, blah blah blah. Among these, blah blah blah. High grade this, blah blah blah. That's crazy, bro. Crazy. And the reason why it's crazy is because we was looking at those buys. So like the only reason why that I really say it's crazy is because of how far it went from those buys. Like these 1900 level buys were insane. What is going on, bro? I can't. No, it's out here wilding. Literally 1900 buys, man. Went went oodle badoodle. Yeah, like I said, crazy. Said gold's getting stopped before the anticipated 1950 resistance, though it seems to have found a bed at 1900. Gold for Wednesday delivery on New York's COMEX settled at 1907 per ounce. Wow. On Wednesday, down boom, 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 the U.S. gold futures reached. Said gold prices softened but are still holding on to the 1900 level, said Edamoya, analyst at Online Trading. A wonder the end of Fed tightening is approaching us, but a shallow recession might not be supportive of inflows for gold, as that might lead to a stronger dollar. Facts. Dollar's rally looks like it will take a break here, but it could resume if yields continue to slide. The dollar index, which measures the U.S. currency against a basket of six major rivals, including the euro and yen, hit a 9 month low of 101.265 on Wednesday. The yield on the benchmark, boom, boom, boom. The dollar and bond yields are tumbling in anticipation the Federal Reserve will execute its smallest rate hike in 8 months at the Fed at the February 1st conclusion of its next monetary meeting versus a stream of aggressive increases it pulled off in 2022. Officially, inflation, as indicated by the CPI, rose by 6.5% in the 12 months to December. The U.S. Labor Department said Thursday it was the slowest annual advance for the CPI since 2021 October. The CPI hit a 40-year high in June when it grew at an annual rate of 9.1% versus the Fed's inflation target of just 2 per annum. In a bid to control surging prices, the Fed added 425 basis points to interest rates since March via seven rate hikes. Prior to that, interest rates peaked at just 25 basis points as the central bank slashed them to nearly zero after global COVID after the global COVID-19 outbreak in 2020. The Fed, which executed four back-to-back jumbo rate hikes of 75 basis points from June through November, imposed a more modest 50 basis point increase in December. For its next rate decision on February, economists expect the central bank to announce an even smaller hike of 25 basis points. The last time the Fed announced a 25 basis point increase was in March of 2022 at the start of its current rate hike cycle. The United States economic data has come in weaker than anticipated this week in further testimony that the Fed's rate hikes were working. The Fed, get out of here. The Fed said United States industrial production fell for a second month in a row in December and amid lower factory output that suggested manufacturers were slowing activity based on the softening demands for goods. Separately, the New York division of the Fed reported on Tuesday that the New York Fed manufacturing survey posted a 32.9 negative 32.9 reading for December versus a forecast of negative 8.6 and a negative 11.20 for November. It was the steepest monthly slide in manufacturing since September 2021. The drop in industrial production and manufacturing coincide with the United States producer prices falling their most in nearly 3 years in December after the sharpest tumble in a year in retail sales. Notwithstanding Wednesday's retreat, the front month gold contract on COMEX has risen more than 4% since 2023 began, wow, extending a similar gain from December and a 7% rise from November. The COMEX gold benchmark could hold well at 1900. In a bull trend, buyers never miss an opportunity for value buying, said Dixit. A successful break above 1920, followed by acceptance above 1928, will help gold rise to 1943 and 1950. Our major resistance and target sits at 1980. On the flip side, a break of sustained A break and sustained trade below 1920 leaves the potential for a further drop to 1885 and 1868. Beautiful. So let's do a quick little gold breakdown. Start from the daily time frame because that's typically what we trade. We trade the daily. Even if we're gonna hold some shit, it'll still be for the goddamn day. But looking at structure, obviously structure is still lovely up. It's been up the whole time. It's been up the whole year. Structure's still up. We finally got buys from the low for the first time. That felt good. Um, at this point for a phase, we are in a push phase. Now, one thing that I noticed with gold is just because it's in a push phase doesn't mean that push phase is over. That's one thing that I can finally accept with gold is just because it's in a push phase does not mean the push phase is over by any means. So we currently have a high sitting at 1935, and all you got to do is literally just go. You feel me? So 1935, shit, literally 1940. All you got to do ain't gonna go down that much. Areas at 1935, 1940. We'll also mark out 1930. Oh, that one's easy. Bow bow. And we'll in this case we'll have five this time because we'll go from 40 to 45, and we'll get one more below at 25, just in case it wants to potentially come down there. Right? It's really as simple as that. You got your major levels in there. They're all 100 pips. My fault. They're all 50 pips apart. You know what I mean? They're literally all 50 pips apart. Perfect. Don't even trip. Now let's go down to this 4 hour because we know where we're at. We understand the sentiment. It's been extremely bullish. You can already see we have a rejection at 1935 for now. Not really a full attempt to 1930, but something like. So there's no, I would say you have a major level here at 1930 and the most recent level here at 1935. Now we're thinking breaks above 1935, um, breaks above 1935, break and retest, catch buys to 1940 and potentially 1945. And on the flip side, it'll be some sort of, you know, respect of this situation, and we'll attack 1930 and potential continuation to retest the resistance at 1925 right here. So one resistance, two resistance, they could both be um, attacked. Now let's go to the 1 hour to see a little bit more structure here. Now the one thing that I enjoy to see is my levels with my my levels and my phases of price action matching up with my key level prices as well. Love to see that. So we have a resistance sitting here at key level 1935. We can obviously already say if it wants to continue bullish to 1945, it's going to have to break 1935. And at that point, we could probably get a break and some sort of retest support from 1935 to continue that up. Now, 30-minute time frame, what you can already see very interesting is this is the only time we add levels in between. I'm gonna add a level here at 1932. I already know that it's lined up very well. Um, it's lined up very well, but it's also a key level. So 1932 is sitting right there, and this is where it gets a little interesting, just a little interesting. And I'll tell you why. It gets interesting because you have this wick here. You know what I mean? Now I know from this level to this level is 20 pips. That means this one's probably only like 7. You know what I mean? Below this wick, you have this wick. If I go to the 15-minute time frame, that could potentially be a level. Now, what we see here is the best trades for sales per se will be below 1930. So let's come back here. Let's come back here. Now look at that. It's like, yeah, it could do this, but these would be the best ones. Feel me? These 1930 cells would be the best. I can already see that because on the 15-minute time frame, that's where structure changed. You know what I'm saying? Let's just go ahead and extend this shit right. All right. I like that. This is kind of messy. I'm not, if anything, maybe sells from here to here, but um, the 1935 to 1930 range is kind of gross. And I want to make sure, even on the 15-minute time frame, messy range. Messy range between 1935 and 1930. You know what I mean? I know it's 50 pips, but it's really not that clean. But what is clean is below 1935 to 1925. Super clean. I'm gonna just, you feel me? Super clean. Super. Now I know there probably wasn't nothing higher. I'm gonna go higher time frame. I know there probably wasn't nothing close to this for a long time. So let's just see. I'm on the 1 hour time frame here. There we go. Let's just see if there's any intraday that I need to add. It'll only be at the 58 level though. I mean, my fault, 38. So above this level, respectfully, it's looking pretty good on the 1 hour time frame. No cap. There's minor, but that's why you do break and retest. So yeah, it's good. It's good. Buys to that next 50 pip range are good. Oh, this shit was hella far. Yeah. Damn. All right, cool. All right, so what we got here is, um, yeah, I think I'll still have that, but just knowing what the hell is good. I don't need those. All right, so we have levels. So I would definitely say clean range from 1930 to 1925. like that. And then let's go ahead and come over here to GJ real quick. See what we can get for GJ as well. We may have to read up on this bitch though a little bit. But let's start over here on the daily. The shit been kind of gross. Over here on the daily and shit. You feel me? Mm, I mean, you got your levels, but from the daily, made a stupid high here. So I mean, shit, we're probably thinking some form of Wake Fillington. Let's see what coordinates that's on. You gonna go 59? Let's go 59. Let's see what 59 looks like. Yeah, fuck it. 59. Then we're gonna go 59.5. That's beautiful. Let's go one more above that at 160. 23 clicks. Let's see. Come on. And then let's go one below at 158.50. Oh hell no, I ain't clicking it 32 times. Alright, 50 pip ranges. Let's hit the 4 hour. So 159 already is a support, and then definitely halfway through you got some other shit. So you can already see that's whoa 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 whoa. Is there a line here? Whoa 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 whoa. Whoa 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 whoa. When the fuck did this line get here? I think I put it here in the start of the stream. That's crazy. That's crazy. Well, beautiful. So basically, this is how easy you can trade it. Breaks above 159 200, target 159 500 for 30 pips. Pretty simple. You know what I mean? Pretty simple. That's how I got it. Look, and here's the wicks on the outside. Bang, right there. Boom, bow. You already see the nice little support here at the 59. Man, clear range in both directions. Clear range, clear range in both directions. Obviously, you can do that. You already know you can do dot and so on and so forth in this bitch. You can also go, you know what I'm saying, double top him, break him. You know what? I'm gonna just keep that as one. Look, check this out. It could double top him, not do him. It could double bottom him, not do him. Period point blank. Period point blank. And then we can go, man, look at it. Look at it. What nigga? That's beautiful. I ain't gonna lie, that's beautiful. Breaks above, breaks below, tight range, 20 pip range. Oh, the numbers are aligned, the ranges are aligned. Oh man. It's choppy in here. I only want breakouts. It's choppy in there. I only want breakouts. Lowest support way down here. Then it just runs into a bunch. Hmm. I have to tell Lonnie, GJ looking low key crazy. GJ's looking great. Gold, gold is looking pretty good. Gold is looking opportune. GU, I would have to do a quick one real quick. This one I don't even like having multiple pairs for real. But I feel like it is cool to have GJ and GU because those are two like similar but different pairs. The major is the pound, but the difference is the yen and the US dollar. And then you got gold and the US dollar. Beautiful. Um, daily time frame. You see a crazy high there. I haven't did the gold numbers yet. Let's see what 25 look like. 25. Is that even touching it? Fuck no. How far is that? That shit's hella far. Look, this line. Whoa, 65 pips away. So 25 to here is what? So maybe it's the other numbers? So maybe it's 50, 24, 500. Let's see what that look like. That's decent. That's decent. Now let's go 25. Now let's go 25. And then let's go 24. Hey, then let's go 23, 5. That's daily. Structures up, phase. It did a push and an exhaust. It looks like it's just continuing to the high. And we have a high at 24 flat, looking to see if that could be broken pretty much overall. Let's go to the 4 hour. Oops, on the 4 hour, what we have here is definite, beautiful uptrend. Lovely, love to see it. Um, Rejection of 24,500, close at 24 flat. Definitely can get wick fills to the top, no problem. I don't really want to trade the pound US dollar because I just feel like neither of them are open. Like literally neither of them. And so I'm not really fucking with that. But I mean, it is what it is. They could definitely fill this wick. So you got breaks above. You can already see it. Breaks above, wick filling ton, and this level. It's not random because it's really these highs. You would just have to come down here probably another 50 pips to 23 flat. 23 flats down here though. It's okay. It's okay. Because you have this resistance right here. Ow. And then you have this iffy situation. A little iffy situation where you have, whatever. And that can honestly go over there. But what you have here on the GU dog, definite buys to fill the wick and then some. Definite reversal. Sells. And of course, as always, the come up, retest, the come down, the retest. And you see now we actually, okay.
Honey.
Yellow. I, as always, it's just the same. You got to be aware of that fake out. That's all. It's like, oh, resistance at resistance. Yeah, but breaking it? Nah, faking it. You know what I mean? Same thing here. Oh, support, fake out. Buys. I already know about them. They happen all the goddamn time. But yeah, man. Honestly, all these pairs as of right now look pretty damn good. I mean, shit. Even this slut right here looks pretty damn good. Actually, let's not do that. Let's do this. Let's not do that. Let's do this. What is that? The 1 hour? Wow. Wow. Not the 1 hour. That's pretty crazy. That's pretty clean. I ain't gonna lie. Wow. You got 30 in this direction and like 50 in that direction. That's insane. I gotta text this man. Like all three look crazy. Look, GU looks amazing. GJ looks great. And gold looks opportune. Matter of fact, yeah, yeah, yeah. I would need a little bit more structure on gold. I ain't gonna cap, but GU and GJ both look hella good. No wick at the top, breakout. Stop playing. You already got a little tap. Man, stop playing. And GU over here, so GU is at the top of this little range right here. Never worry about it. You can get breakout. So for breaks of like this direction, I would just want to retest. That's all. For breaks of this direction, I think all these tests up here let you know that. You know what I mean? Like sell that shit right here. Stop loss up there. Shouldn't come back there. But in terms of you taking it here and acting like just because it went there, it shouldn't come back here, stupid. I actually like those analyses, man. So I'm gonna put this away for now. I see whenever my boy wanna come fuck with your boy, but we, you know what I mean. We did a light fundamental analysis, technical analysis. You know what I mean. And I love the overall. Just to let you know, let me know, whatever. Hey, man. Okay, what is going on? Oh, okay. Just the overall. You know, one thing I want to show was the trade from yesterday and how it was able to be taken and how it could be repeated. All it was, hey, there's a support at this level. You know what I mean? Prices coming back. Obviously, it wasn't that big, but prices coming back to test it. It tested it right here. Now, all we was looking for, which is the same thing that we look for everywhere else, which is, all right, if it's gonna break, hold on. If it's going to break this level and want to come all the way to this level, all we want to see is a push phase exhaustion of some sort. Of some sort. Make a low, come higher than that low, create some sort of structure. Either give an opportunity at the high that you make or re-breaking the low. You know what I mean? And we can get breaks with this, we can get something here, and we could take that right there, right? That's all that was. And then all this was right here was it's already a support. Just come in, Let me know what you're gonna do. You jabbed at it. Great. Now you let me know what you're gonna do or what you could do. Close. Now that you're going to retest it, if you do it again in any sort of way, even if you come deeper like this, even if you come deeper like this, I'm still thinking this. Okay, now you're breaking the level. I'm not going to do anything with you until you come up so I can sell you again after confirmations. But as long as you don't give that type of shit, as long as you don't give this type of shit like you did here, all you did was break it, close, come right back up. Look, create, break, close, come right back up. And that's exactly what that is right here. You feel me? Definite support, came and retested or tested it in the first place, came and gave you the final, false break, break of 5 minute, or even break of the candlestick high, 15 minute, go crazy, this leg. And this was the most beautiful, beautiful leg you could have caught. So all we're doing is just repeating that. If we're taking breakouts in this direction, you need break and retest. If it's buys or whatever buys off support, you need creation and retest to confirm. And that's really it, man. That's really it. So as of now, we understand that gold is going to remain having some bullish bias for some time as the pivot pairs are still just cycling into the market, the recession and blah, 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 and all this good stuff. Understanding that inflation is coming down. So the Fed will have to or will not have to continue to raise interest rates at such an aggressive level. And at that point, some softening will occur with monetary policy giving some room for gold to take strength due to these recession fears and scares, even though inflation is going down. But some of the producer prices have done what they've done, and some of the manufacturing sectors and things like that have been doing what they do. And all that means is signs have been showing up that says, hey, there may potentially be some fears to be aware of. Be cautious. Okay, cool. Now from there, for the pound, I'll be very honest. I'm not 1,000% sure what's going on with the pound, but what I do know is this: the inflation, the pound inflation, is somewhere around 10%, which is hella high. Let me see. Pound CPI 10.5, hella fucking high. Hella fucking high. What is their Fed funds rate? We could find that out, but their inflation's high, so they're probably going to have to raise their rates anyway. So some strength is probably going to come to the pound. Some strength is probably going to come to the pound due to their inflation. Like we literally just get another chance to do it all over again. Like that doesn't just mean buy, 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 but when buy opportunities are coming up, definitely. And so I know for a fact the pound just by itself has some highest inflation and is going to need to raise its interest rates and gain some value. Um, period, point blank. That's going to bring that alone is going to bring strength. And the recession scares, that's where gold is going to go up. So the pound can low key go up, fucking gold could go up, and the US dollar can soften and start to go down. Literally, bro. And the yen, I don't 1,000% know what's going on with the yen. I don't know what the yen inflation level is. I don't know what the yen interest rate level is. I don't know really what the yen's economic troubles are right now. So in that aspect, I can't act like an expert in pound yen by any means. Just have to be aware of these high impact events and just trading as we go, you know. But other than that, I think we're in a good position, good standing, and definitely ready to go crazy. Definitely ready to go crazy.